For centuries, lending money with interest wasn't just suspicious. It was a crime, a sin, something so dangerous that entire civilizations tried to ban it. The Greeks condemned it. The Romans restricted it. The medieval church outlawed it. And for 1,000 years, anyone caught charging interest was branded a usurer, a criminal. But here's the twist. The very thing once called immoral is now the foundation of the global economy. Interest, debt, banking itself. So how did the world's most forbidden practice become the business model of civilization? And what price did humanity pay along the way? Stay with me, because this story doesn't just explain our past. It explains your mortgage, your student loans, your future. Let's rewind. In the earliest cities, Mesopotamia, debt was tracked on clay tablets. Farmers borrowed seed. Traders borrowed silver. And when harvests failed, families were sold into debt bondage. It got so bad that kings occasionally declared debt jubilees, wiping the slate clean, just to stop society from tearing itself apart. The Greeks looked at this and said, "No." Aristotle called interest money breeding money. Unnatural. The Romans capped rates because they saw what unchecked credit could do. It could hollow out a republic. Then came the great religions. The Hebrew Bible warns against usury among brothers. Islamic law forbids riba, interest taken on a loan. Medieval canon law called it a sin. Why? Because debt destroys the weak first. A drought, a bad season, one twist of fate, and the lender owns you. So, societies fought back. Caps, bans, punishments. For centuries, the message was clear. Making money from money was dangerous and forbidden. But need never disappears. And that's where the story gets interesting. Trade doesn't stop because of laws. Merchants still needed credit. Kings still needed cash for wars. Pilgrims still needed safe ways to move money. So, workarounds. In the Mediterranean, you had the commenda, a profit-sharing partnership that looked like investment, not a loan. At sea, bottomry and respondentia, loans that only got repaid if the ship returned alive. Risk looked like equity. In cities, moneylenders charged exchange fees instead of interest. 2 contracts instead of 1 loan. The form changed. The cost remained. And there's a painful chapter here. Jewish communities, barred from many guilds and trades, often filled the credit gap. They became essential lenders because Christian law restricted Christians from charging interest. Essential and resented, needed by kings, and scapegoated by crowds. History shows the pattern. When debts piled up, persecution followed. It was dangerous work because power hated being indebted. The lesson? Even when banned, banking adapted. Hide the interest, rename the fee, shift the risk. Finance moved into the shadows because markets always find a way. Now to Italy, Florence, Venice, Genoa, where modern finance learned to wear a suit. Here we meet the Medici, the Lombards, families whose benches, banca, gave us the word bank. They mastered bills of exchange. A merchant brings florins. He needs ducats in another city. The banker exchanges currencies for a fee. But inside that fee, the time value of money, interest, without the name. They kept ledgers with double-entry bookkeeping, assets on one side, liabilities on the other, so clean that power couldn't resist. Popes and kings who had thundered against usury started borrowing in secret. Hypocrisy? Absolutely. But it tells you everything. Banking went from crime to necessity. The Medici financed trade, art, and politics. Cathedrals rose, fleets sailed, and the line between immoral and essential blurred into a comfortable lie. On Sunday, sin. On Monday, settlement. So how did the dam finally break? The Reformation cracked it open. Protestant thinkers, especially John Calvin, argued not all interest is evil. Usury at excessive rates? Condemn it. But reasonable interest? Allow it. Cities that adopted this view exploded with trade. Northern Europe embraced credit. Empire needed capital, ships, guns, colonies, roads, and credit provided it. Law followed reality. Interest caps replaced bans. Contracts overtook sermons, and slowly, the moral prohibition became a regulatory detail. The world had decided we can't build an empire on silver alone. We need debt. By the 1600s, the transformation was complete. Amsterdam created the Whistle Bank, solid, trusted settlement. London opened the Bank of England in 1694. Here's the trick. Wealthy investors lent to the state. In return, the state granted a charter, the right to issue notes. Debt became money. Money funded war. War expanded markets, and markets demanded more debt. Britain even invented perpetual bonds, consols loans with no maturity date. Think about that. A state borrowing. Forever. Public credit turned into public power. From then on, empires weren't funded by treasure chests. They were funded by bond markets. And interest, once illegal, sat at the heart of it all. But let's talk about the bill. Interest doesn't just enable growth. It compounds. If you've ever carried a balance on a credit card, you've felt the teeth. A simple example. Borrow $1,000 at 7%. Don't pay it down. In 10 years, that's nearly double. In 20, almost 4 times. Compounding is a staircase you climb if you're the lender, and a treadmill you run if you're the borrower. In the Middle Ages, debt enslaved farmers. Today, it chains students to degrees, families to mortgages, nations to creditors. 2008 proved the fragility. When the credit edifice cracked, millions lost homes and jobs. Banks were rescued. People were not. And yet the machine rolled on. Bigger, more complex, more dependent on interest than ever. The ancients warned that making money from money would shift power to those who already had it. Look around. Were they wrong? So here's the question we need to ask. Honestly, if interest was once banned because it was destructive, were they right? Did we normalize a tool that quietly transfers wealth upward? A system where debt begins as opportunity and ends as control. I'm not saying abolish credit. I am saying know what game you're playing, because the rules are older than you think, and they were written by the lenders. If this gave you a new perspective, don't just scroll away. Hit subscribe. This is Economic Chronicles, where history exposes the present, and the future is written in the lessons we refuse to learn.